in order to leave a range, you need to test all three aspects. You need to test the support, you need to test the resistance, and the midline. You cannot leave that range without testing the midline. So if you're going to break up, you got to come down, test that midline before breaking up. If you want to break down, you got to come up, test that midline, come up, test that midline before breaking down. And that's exactly what we're doing right here. Do you see that? Right? We went up and down in the range for 30 or so days, tested the top of the range. I don't like the word fake out. I would say what we call it a spring in Wyckoff analysis, right? Where you test the upper limits of the range and you come all the way back down, right? And that's basically exhausting. That's like, I'm going to try to break up. I'm going to try to break up. I'm going to make an attempt to break up. I'm going to make an attempt to break up. My last ditch attempt to break up and out of this range. I can't. I don't have the buying power. The buyers aren't present. Ergo, I'm going to break down. That's exactly what's happening right here. And then the last bit, the last sort of sequence, the last movement, right, of this entire range price action is exactly what we're seeing now. A retest of the midline before escaping the range. This is why we're not done. We haven't even started. Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 3rd, 2024. And we're not done. We're not finished with this Bitcoin dump. Guys, last time I made a video, I was saying it was likely that Bitcoin and the rest of the cryptocurrency market were going to experience a large drop. That happened, but it's not finished yet, and I'm going to tell you why that is. If that interests you, then watch until the very end. Hope everybody's having a great start to the new year. Okay, let's look at Bitcoin. I'm on the 4-hourly time frame, and if you've been following my work, and if you watched the last video, I said that we were likely going to initiate a big drop to this target down here. Okay, let's redraw that. This target down here. Okay, this is pretty far off. We're not even close to that target. Okay, we didn't even hit this $38,000 support level. So I mean, in no way, shape, or form is this dump over. And seldom in the cryptocurrency markets, in any financial markets, do you see like a big, what would we call that? A flash crash followed by a reversal, right? That doesn't happen. If anything, reversals need time because you need to reaccumulate, right? You need to crash, accumulate, and go, okay? And that accumulation takes some time because that crash typically wipes out a bunch of leverage, wipes out a bunch of buyers, and sellers kind of are the only ones there. Buyers have to, reposition themselves in the new positions, right? So in no way, shape, or form would I say that we've seen the end of the drawdown. We've seen the end of the downward price action on Bitcoin and the rest of the cryptocurrency market. However, altcoins may be doing something different, okay? So stick around for that. Altcoins are interesting, and it's not so super straightforward like, oh, Bitcoin's going to come all the way down to the $31,000, $32,000 target, and altcoins are also going to crash a bunch. Not necessarily. That's interesting. That's nuanced. So stick around for that. All right, let's keep on going with Bitcoin. So like I said, very straightforward analysis here, right? You have a 5-wave impulse. You have a distributive range, quintessential distributive range played out just like we thought it would. Basically, a rejection at the top of this distributive range at 45K-ish. And now we're basically retesting. What are we doing here? Let's zoom in. So on the 4-hourly time frame, what do you see? You see very clearly our distribution range. Okay, and when I talk about a distribution range, I'm speaking in terms of a Wyckoff distribution range, meaning a range of price action that is slated to break down. All right, break down, as opposed to an accumulation range. So this is important because what do we know about ranges? There are three main aspects to every range. There's the support, there's the resistance, and there's the midline, which serves as support when you're above it, resistance when you're below it. What do you see now? And this is really, really important. And this is, I love this because you're employing a fundamental understanding of market analysis onto, real life scenarios, and it's showing you exactly what we know to be true, that in order to leave a range, you need to test all three aspects. You need to test the support, you need to test the resistance, and the midline. You cannot leave that range without testing the midline. So if you're going to break up, you got to come down, test that midline before breaking up. If you want to break down, you got to come up, test that midline, come up, test that midline before breaking down. And that's exactly what we're doing right here. Do you see that? Right? We went up and down in the range for 30 or so days, tested the top of the range. I don't like the word fake out. I would say what we call it a spring in Wyckoff analysis, right? Where you test the upper limits of the range and you come all the way back down, right? And that's basically exhausting. That's like, I'm going to try to break up. I'm going to try to break up. I'm going to make an attempt to break up. I'm going to make an attempt to break up. My last ditch attempt to break up and out of this range. I can't. I don't have the buying power. The buyers aren't present. Ergo, I'm going to break down. That's exactly what's happening right here. And then the last bit, the last sort of sequence, the last movement, right, of this entire range price action is exactly what we're seeing now. A retest of the midline before escaping the range. This is why we're not done. We haven't even started, right? And what I mean by that is the start of the real bloodshed happens when you leave the range, right? Just like, when you're leaving an accumulation range and you're breaking up and out. You really finally get that price action when you leave the range to the upside. Similarly, you only really see bloodshed, right? Drawdowns, like negative price action, when you're leaving the range to the downside, and that only happens when you test that midline for the last time, and that's what's happening right now. So this would be another great entry for a short, not financial advice, but you're getting in because you know with a high degree of probability that next move is coming. Okay, a breakdown of the range, and that breakdown of the range should yield our impulsive movement down to our target of 32K range. And why? Because it's just quintessential Elliott wave analysis. 5 waves up, 1, 2, 3 waves down to the golden pocket. Okay, and if you take your Fibonacci retracement tool, the golden pocket is the 0.5618 Fibonacci retracement level, which is thereabouts. Okay, so that's what's going on with Bitcoin. In my estimation, we haven't even started yet. So people who are thinking, oh, big bounce, that must mean we're going to 100K now and that dump is over and this is an intra-wave correction. I could be wrong, but I think that is very misguided. You do not want to position yourself long in Bitcoin or in assets that are clearly in their distributive ranges. Now, we have looked at some assets like Cardano, okay, on this channel, which is also in the same it's in the same boat as Bitcoin, insofar as we can identify a 5-wave sequence and a range of distribution. Okay, and again, you see very clearly that the retest of the midline is taking place, okay? It's taking place in Cardano, just like the textbooks say. It's taking place in Bitcoin, just like the textbooks say. And it's also taking place in Chainlink and other such altcoins. Not every altcoin is in this position. So let's say you wanted to trade the markets and there were certain assets that you wanted to trade short. You want to trade short, not financial advice, but theoretically, you want to trade short those assets that have clearly exhibited 5 impulses or 5 waves up, right? An impulsive wave in 5 movements and a distribution range, because it's likely to break down from that and yield that golden pocket retracement, okay? But not every altcoin is in this position. And I'll give you an example or two, okay? Look at Blur. Look at Blur. Is this a 5-wave sequence? Some could say it is. It looks like it, but that's to the untrained eye, okay? And I'm not going to break this down too carefully, but if you pay attention, Blur has been in corrective in a corrective uptrend, meaning this is not a contiguous impulsive wave to the upside. This is a series of corrections that just so happen to be in one direction. So if you're looking at Blur carefully, you see that this is the latest of such corrective moves, and this was the counter correction, and this was the accumulation. So this is more likely than not to break out, all while Bitcoin is likely going down and preparing to go down. Cardano's likely to go down, preparing to go down. Link's likely to go down, preparing to go down. There are some altcoins that are preparing to do the opposite. So I propose, and I'm not sure exactly, but it looks very bullish. If you look at the Blur asset, the Blur chart, yeah. What's another one? Hook. There's a lot of these altcoins that are closer to support than not. They have not exhibited 5 waves up, right? They've been in pure correction. So if you wanted to go long, you would want, and I'm kind of echoing what I said in the previous analysis, if you do want to go long on altcoins, you want to choose altcoins that have not put in an impulse to the upside, like Cardano, like Chainlink, right? You want to go with something that's closer to its support level, because it's more likely than not to break out sooner than later, okay? What's another example of this? Let's see. BAT, I believe. Let's see. Balancer. Yeah, basic attention token. Look at that. Corrective, right? It's basically still stuck in its corrective range. Okay? It hasn't moved from its corrective range, bear market accumulation. That's more likely than not the capitulative move yielding a breakout of this bear market accumulation. Balancer is another one. Do you see how not everything's doing exactly the same thing? It's not. So everything went down, but not everything went down in the same way, and not everything went down for the same reasons, right? Going down after a 5-wave impulse is not the same as going down because you're putting in a corrective pattern, right? Or like an accumulation pattern. You're going down in the context of an accumulation pattern. This is another one. Balancer. Look at that. If it were to break down, where would it break down to? That's kind of the question you should pose to yourself if you're looking to go long on any altcoins. If it had to break down, is there any space? Is there any likelihood that it could go down any further? And always, you should tell yourself anything can happen, but is it likely to go down any further? This doesn't look like that. Basic attention token doesn't look like that. Hook doesn't look like that. So on and so forth. So there are certain altcoins that are primed and on support, ready to break out at any moment once it reaccumulates following this drawdown, okay? And then other altcoins like Chainlink, like Cardano, that are likely going down further for a longer period of time, kind of like Bitcoin, okay? Both can be true. And to kind of echo this market, this sentiment, this market read, let's look at the total 2 and Bitcoin dominance, okay? So total 2 basically, excuse me, all altcoins, all put into one, right? It's an amalgam of the altcoin chart put into one. What do you see here? 5 waves up and an initial break of structure. So basically, the total 2 chart is telling us that you're still in need of one of these, a counter to this initial break of structure, call it A wave. You still need one such B wave before a tried and true C wave. Do you see what I mean? So on the total 2 chart, you're looking to go up, albeit correctively, but you're looking to go up with a B wave, okay? Because it's very clear here that this right here is a 3-wave break of structure, 1, 2, 3, targeting wave 4 of the previous trend. So we're waiting for a B wave and C wave, right? So that's what the total 2 chart's looking like. So basically it's telling us in the aggregate, altcoins should be going up, you know, as a whole, like in the immediate short term, medium short term, right? And then what's Bitcoin dominance telling us? And this is the most compelling chart, right? Remember, what Bitcoin dominance tells us is if Bitcoin dominance is going up, that basically tells us that Bitcoin's gaining against altcoins. And how does that happen? That typically happens when Bitcoin dumps and altcoins dump even harder, okay? But if Bitcoin dominance is going down, that basically tells you that altcoins are gaining against Bitcoin in some way, shape, or form. And it's typically in the case when Bitcoin may be stagnating, going sideways, going down, altcoins going down less, some altcoins going down with Bitcoin, other altcoins are actually going up. This is what Bitcoin dominance is telling us right here, okay? And basically on the daily time frame, you're seeing you're at resistance and you're putting in one test of resistance, another test of resistance, and here you have a big daily doji candle right here. Do you see that? This is very important. That basically shows you you're at resistance. Look at your momentum indicator. Bitcoin dominance is primed to go down. This supports the thesis of some altcoins are going to go up while others go down, slowly with Bitcoin. So just that is my read on the market. This is why it's not super straightforward. Everybody's going to go down in the same way, shape. No. Some altcoins are going to start moving and some people are going to be surprised. Wait, I thought we were in a downtrend. No, the crash happened. The initial crash happened, but the crash was different for everybody. Some altcoins were just putting in another, run-of-the-mill correction in the midst or in the context of accumulation ranges, right? Bear market accumulation ranges that they had yet to break out of. Others, like Cardano, like Chainlink, like Arweave, are going down more seriously, and you shouldn't think of longing those in any way, shape, or form anytime soon. So that's my analysis. Hope this was helpful. Hope this was useful. Like, share, and subscribe as always, and I'll see you next time.